Hey, good morning, options traders, and sorry for being away for the last couple of days, but I've been battling Tropical Storm Eta down here in South Florida and been without power for the better part of the last 2 days. So needless to say, it's a little difficult to answer a lot of the questions that are posted without being able to get on a computer. But we're back up and running, and one of the questions that really stuck out was posted by a trader asking about Horizon Therapeutics. And his question was, can you interpret this series of 3 candles? We had this very large white candle, which is typically green on most platforms. It's a bullish candle. But then we've got these 2 red ones kind of tucked inside. And is this really a pattern in and of itself? And if not, how would you interpret it? Well, I like this question for a number of reasons, but it also highlights the importance for understanding the individual candlestick patterns. Because to interpret this, you really have several things going on, and you need to understand how to blend them. So let's take a look at some of the basic patterns you should know in order to interpret this pattern. First off, understand that within candlestick charting, there are a lot of reversal patterns. That just means if the stock has been going up, there's a point that we could expect it to go in reverse, start heading south. Or if it's been going down, when could we expect it to turn and start going up? Those are what are called reversal patterns. And every single candlestick pattern has a bullish and a bearish reversal. So for this demonstration, I'm just going to do the bullish version, but we could flip it around on its head and do the same thing for a bearish version. So let's say that we are in an uptrend. We've had a long series of candles where we have higher highs and higher lows. The next day we get another green candle. So it looks like this bullish trend is going to continue. But then the next day, we get this. And what's happening here is we've got this big red candle, but notice that to get this pattern, we had to gap up. When you have a green candle, the opening trade is at the bottom of this green box, what's called the body, and the closing trade is on top. And because the close is above the open, that's why the candle is green. The red is just the opposite. This is the opening trade, the top of the body, and the bottom is the closing trade. And so that's why the candle is red. The closing trade is below the open. So we had to gap up. So again, here's our closing trade from the green. We gapped up to the opening trade. So the next day on the opening bell, looks like the bullish trend is going to continue. But something happens throughout the day. The stock starts to come down and we close at the same point where we closed the day before. So whenever you see that the closing prices match, or at least fairly close, that is what's called a meeting line pattern. And that's a bearish reversal sign. Now we could have gotten the same idea just to a stronger extent. Maybe the stock instead gapped up, but now notice that the closing price actually breaches the halfway point of this green candle. So if we look at the center of this green, extend a line straight over, this candle actually broke below the halfway point. And if this happens, this is actually what's called a piercing pattern. It's really just a stronger degree of a meeting line. But we could also do one better. We might see a gap up like this, find that the stock reverses during the day, and the closing price actually sits well below the body of this green candle. In most cases, we'd like to see it sit below this bottom shadow as well. But as long as it's certainly covering this green candle, or what we call engulfing, that's what we're looking for. So take a look at the body of this red candle. If we extend 2 imaginary lines over to the left, notice that they completely encase or engulf this first green candle. And if that's true, that's called an engulfing pattern. So an engulfing pattern is a really very common and very powerful reversal sign. But we could also do one better. Rather than seeing the stock gap up like it did in the first 3 cases, it might gap down right off the opening bell. So look what's happened here. The opening trade on the green matches the opening trade on this day. And the stock continued to sink. So if this happens where the 2 opening trades are the same, or at least very close, that is called a kicker pattern. And a kicker pattern is one of probably the strongest reversal pattern in all of candlestick charting. And we could get stronger degrees of a kicker if this opening trade had actually sat lower. That would just be an even stronger kicker pattern. So these are the four basic patterns you need to understand, and whichever one crops up, they are all signs that we are probably going to see a reversal. So keeping these in mind, let's go take a look at this post. So the first thing to notice is that we are in a downtrend here, and then we hit this red candle, and what happened the next day? This white candle right here. This is a kicker pattern. See, this red candle right here, this was the closing price, the bottom of this red box, but the next day the opening trade gapped well above that and continued to run. So this particular date right here on this white candle by itself was a really big bullish signal. Looks like it was going to be a reversal signal, but this is why we also tell traders to give it a second candle, what we call a confirmation signal. Let's see what happens the next day. Does it gap up again, or at least start heading up, or is it going to reverse? So in this case, we did reverse. But look what happened. The opening trade was above the close, so it looked like it was going to continue up. We did gap up, but only off the open. And something happened during the day where it started to fall. But notice at the closing price, the bottom of this red candle was not quite below the halfway point, so it wasn't quite a piercing pattern. But at the same time, it didn't close up here. It wasn't a meeting line. So this is somewhere of a blend between a meeting line and a piercing pattern. What happened the next day? The opening trade matched right where the closing trade was. So it's just a continuation. So these two red candles by themselves, if we were to combine them, which we'll talk about in a moment, is just one big, large red candle that almost completely takes out this bullish candle. So it's really showing a sign that the bulls are done. And the thing that you want to watch, really in all of technical analysis, is to try to see who's in control. So there's no doubt that over the past 2 days, the bears are in control, and you'd have to say, what is most likely going to happen? We're most likely going to see the stock continue lower. Now, the easiest way to interpret this, and I've got another video in this forum called Candlestick Tricks, and it's a little technique or a little trick you can think of to blend them. Notice that in this chart, each candle represents 1 day's trading time. But what if they represented 3? Could we do that? Sure, we could add them together and get a different look, and here's how we would do it. So here's a replica of those 3 candles, and if we want to combine them, what does it equal? Well, I'm going to take the opening trade of my first candle, and that's the bottom of this green box. There's the opening trade. I'm going to look at the closing trade of the last candle. So in this instance, I've got 3 candles, but if I had 4 or 5 or 6, I could do the same thing. I'm just looking at the last candle. And the closing trade is down here, the bottom of the red. So notice that if this is my new candle, the opening trade is on the bottom, closing is on the top, the candle body would be green. So that would be my candle body. Now I need to fill in the highs and the lows. And in this instance, I'm going to look at all of my candles, 3 in this example. What was the highest trade? Highest trade was way up here. What was the lowest trade among all 3 candles? Right here, bottom of the green. This is what's called a Maribozu, or a shaved candle, but it also was the low of that day. It's the lowest price of all of these 3 candles. So my high is going to be here, and my low is down here. So there's my shadow. So these 3 candles, if we combine them, equal a monster inverted hammer. And this is a bearish signal, a big one. Don't worry that the body here is green. Really doesn't matter what color the body is. It's an inverted hammer. And when you see this, it's really hard to say that that was an uptrend, but we did come off of that great big white candle. And so when you see this, you'd really have to lean towards saying it's a bearish position, probably going to continue heading south. So let's jump over to the E-Trade platform and take a look at what happened to Horizon Therapeutics. So here's Horizon, ticker HZNP, and let's zoom in a little bit. All right, so this is the graphic that the trader posted. There was the green candle. It was white in his graphic, but it's still a bullish candle. And then these were the 2 candles that we were analyzing. So here's what happened yesterday, and here's what's happening today. So you can see that those two red candles were giving you a really strong signal that the bulls were done. We just had way too many bears, and we could see that easily when we saw the inverted hammer. We had this huge, huge shadow up here. So yes, the bulls were able to push it up over this 3-day period, but at the end of the 3 days, the bears were in control. And that's what you want to look at when you're looking at your technical indicators. Which side is in control, the bulls or the bears? So I hope this helps everyone to understand that series of candlesticks, but if anyone has other questions, please post away. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a brand new Candlesticks course for 2020. You can find it all at optionsa2z.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.